In a recent article from CNBC, they stated that the U.S. may need another 1 billion square feet of warehouse space by 2025 as e-commerce booms. Well, luckily, the company we're going to talk about today gets over 40% of its business from e-commerce, and that company is none other than STAG Industrial, an industrial REIT. So STAG Industrial is a new REIT that I just started buying, and I appreciate your time and I respect it, and so I'm going to try and keep this video as short as possible. So if you enjoy the video today, please don't forget to like and subscribe. And the company we're going to be talking about today actually reports earnings tomorrow, May 4. So stay tuned for after their earnings report. I'm going to do an analysis of how I think the earnings went. So if that's something you're interested in, definitely don't forget to subscribe to the channel and hit that notification bell. It pays around a 4% dividend. Chart looks great. It's just steadily been increasing over the years. With a market cap of a little under $6 billion, it's also a mid-cap company, which I like as I don't really have much exposure to mid-cap companies. A lot of what I own is large cap. And additionally, another reason why I like this is if we take a look at their annual report on page 12 here, as far as their competition, due to their smaller size when compared to other REITs, local real estate investors historically have represented their predominant competition for deals, and typically they do not have the same access to capital that STAG Industrial has. So being a publicly traded company gives STAG a huge advantage in their marketplace. So STAG is currently in 39 states and owns 492 buildings, and they're focused on single-tenant, triple-net leases, which are great. It has steadily increased earnings. Great looking chart here. Earnings just keep gradually increasing year after year after year. And if you take a look at their revenue increases over the past few years, you can see it's been increasing anywhere from 15 to 20%. Now, as of December 31st, 2020, the company had nearly $4.7 billion in current assets against its long-term debt of around $1.7 billion. So that's a great ratio, a little under 3-to-1 assets to liabilities. This is an excellent company with great growth and a great starting dividend yield here. It also pays dividend monthly, which I love. Give me some monthly cash flow. So if we take a look at their investor presentation here on slide 10, as I said, 40% of their portfolio handles e-commerce activity, and e-commerce presents a very attractive market. It's only increasing, and I can see that trend continuing. They're very well diversified. Their portfolio spans 60 plus markets and over 45 different industries. 86% of their tenants have revenue greater than 100 million, and 60% have revenue of greater than 1 billion. And as you can see from this list here of top 10 tenants, these are companies that are not going anywhere anytime soon. Great to see Amazon as their number one tenant, making up a little under 4%. But at the same time, all these other tenants only make up, from 1.3% to 0.8%. So it's not that all their business is coming from a handful of customers, which you don't want to see. You want to see a company that's very well diversified, and STAG definitely is. So this company has shown some great growth since its IPO a decade ago. The dividend is not growing very quickly, but it is already a pretty high yield, sitting at a little under 4%, which is great if you want cash flow now. This is arguably the best sector of REITs to be in right now, as there's a lot of uncertainty when you look at things like retail, hotels, offices. People don't know when or if they're coming back, if they will ever return to their former glory. I own Realty Income and RioCan as well. Those were my only REITs before purchasing STAG, and they're primarily exposed to retail, which is a little frightening because the world is changing very quickly. So e-commerce makes up over 40% of their business, and it's only going to continue to grow. This is a great industrial REIT that I believe can deliver long-term capital appreciation, and I also like the fact that it's a mid-cap stock. So let me know what you think of STAG Industrial in the comments below. Do you own it? Why or why not? What are your favorite REITs? If you enjoyed the video, don't forget to like and subscribe. This is Vinny from the Investment Club, and I'll see you next time.